Hey everybody, welcome to Trading Capital's exclusive analysis. We are starting this stream here. It's July 4th, roughly 7:55 p.m. And we're jumping into the charts here. We're just going to dissect the market, try to see what trends are unfolding, what's happening. There's lots to discuss. I mean, first things first, we can jump into an asset class that is shaking and moving right now. The crypto space. So BTC right now looking pretty weak at the moment and under significant pressure, and no one should be surprised by this. You know, there's been absolutely telling price action ever since you lost this green bar impulse green candle and it was faded. You had an attempt at breaking out double top. It's just been sold into. Now the question is this the buy point? I don't think so. Why don't I think so? Well, I think we're getting close, but I do think that if we look at the total crypto market cap, okay, you can see that this chart is actually looking a little bit weaker, and I'm expecting that there is probably going to be one more little flush lower in this particular asset class. The area that I'm seeing here on the total crypto market cap, okay, let's just erase everything really quickly. And guys, feel free to put some questions in the chat. I will be taking some chart requests. But this is the area that I'm looking for in the total crypto market cap. You can see these pivot high to pivot high, pivot low to pivot low. I think that there's going to be one more little flush that takes us below 2 trillion. And nevertheless, and then I think that's where we get the bounce. Another really fascinating chart that I like to show and demonstrate. Let me just figure it out here. Do this. So I mean, take a look at this cool little trend line connecting these little pivots here. Take a look at that resistance. Your pivot low to pivot low to pivot low to pivot low. Boom. Smack that high. Now what's really fascinating is if we actually look at Bitcoin structure, BTC, USDT, and again, I'm watching MicroStrategy, Coinbase longs tomorrow. What's really fascinating is Bitcoin actually, if we erase everything here and we redraw that channel, you can see Bitcoin's now potentially starting to lose that zone. So not a healthy thing for the crypto market cap at this point in time. But what's really fascinating is if you drag this a little bit lower, see how this resistance kept us in check a little bit here and then Bitcoin had this power move? There could be just a simple back test that is occurring here. So I mean, this is why we're at a very key inflection point for crypto. And obviously crypto right now is under pressure. Bitcoin is selling off at the lows, breaking 57K. If we look at the daily 200 MA, you're even piercing that area in blue. So it just shows you that there's a tremendous amount of weakness right now on the daily chart. So whenever we're breaking daily chart levels, guys, we want to flip to that weekly time frame. And you can see the weekly time frame. Oh yeah, this is the chart I wanted to show you actually. This is exactly. So it was escaping me briefly there for a second, but you can clearly see this parallel channel on Bitcoin where Bitcoin hit a high, low, low. Then you got rejected here off of this little weekly reversal candle. Okay, and then Bitcoin broke out to the upside. So Bitcoin was showing much more relative strength compared to the overall crypto market. And when we look at things, you can see the total crypto market cap getting rejected at that same little parallel channel. If you drop that channel through your 2 pivot highs here, your 2 pivot lows, you can see the total crypto market cap getting rejected. So when we look at the rejection here, the total crypto market cap, and we look at what happened to Bitcoin at the same price level over here just several weeks back, there's a strong chance that Bitcoin is probably going to try to retest the low of this channel. And again, you kind of have to play with it. It's not a perfect science. It could be identical lows here, could be through this area, but somewhere in this vicinity, I think BTC is probably going to test this 51.9 area, 51.7. I think that's the big technical level that I'm setting up for. And just to show you, let's just see if there's any sort of a fib level in that region. Yeah, take a look at that. Just so happens, and this is all live analysis, right? So I haven't done this before, but look at that. 382 fib intersecting right at the lower boundary trend line there. So in the next 1 or 2 days, Bitcoin could really see a flusher to the downside. And if we look at, its counterparty, the equity stock MicroStrategy, where's MSTR going here? It's holding that high pivot at this point in time, but this is potentially your first little lower high in the trend. And honestly, it looks like MicroStrategy is probably going to try to make a move. Well, let's just throw up our fib. I always like to just get a sense of where those fib levels are, because I do think they're very, very powerful and strong. So if we throw up that fib, you can see we're sitting right at that 382. So MicroStrategy in the near term is actually much, much weaker than Bitcoin. So Bitcoin hasn't even tested its Fibonacci level yet. So again, if we throw that 382 fib on from this low to the high, you can see that Bitcoin hasn't even tested its 382 yet. Okay, it's Fibonacci move. But when we look at MicroStrategy, it's already at its 382. So what I'm leading here to and concluding is that if Bitcoin is going to test its 382 Fibonacci support zone, and it falls lower, that likely means MicroStrategy is probably going to retest its 50% retrace zone at 1064. So you can see there's quite a bit of downward pressure that still could resume in this overall crypto market cap. But needless to say, I'm watching it closely. If Bitcoin gives me any signs of a potential reversal tomorrow when the market opens, definitely look for some longs. There's probably going to be a decent dead cat bounce to trade, in my opinion. All right, so enough about the crypto. Actually, we'll just quickly go through Ethereum and Solana. Look at Ethereum losing this green candle bar. That's a very bearish sign. Why is it bearish? Take a look at this volume that occurred there. All this volume is now being eaten up. That's a problem. That's a big, big problem. You get a daily close below that, and Ethereum is probably going to pierce this lower boundary trend line. You can see this little range that it chopped in for quite a long time before it broke out, back tested, made a bounce, lower high. This is the scary thing about crypto, right? Is we have lower highs in place, and that's a problem. That's not a good sign in my opinion. So you'll have some support at this trend line, but given the fact that I think Bitcoin's going to be showing a little bit more weakness, I'm looking at a move, a back test at the minimum, probably to this falling wedge pattern, which was your original breakout. And that could be somewhere in the middle of this channel, this original channel. I'd be a big, big buyer there. Now, could you get a bounce here short term? Yeah, you probably could. 3,000 psychological whole number, piercing that area. There's likely going to be some buyers that step in on the short term basis. I mean, if we look at the daily chart, getting a little oversold in Ethereum, which means that we're probably going to go a little bit lower in the overall chart. Let's quickly take a peek at Solana, SLUSD. Yeah, this is a nasty one. Solana's chart is looking grim. What are we seeing here? Left, ahead, and a massive right shoulder. Sorry about my drawing. That was not a pretty right shoulder, but nevertheless, it's a shoulder we're going to go with. And again, depending on how you want to draw this trend line, if you want to use it from this pivot here, you can see we broke this head and shoulders quite a long time ago, got rejected. Let's calculate the downside move. Potential. Just because it says 51% down doesn't mean it's going to play out like that. But there's always a potential that we have to recognize. So again, imagine that, eh? Solana back at 30 bucks. Wow. Don't know what would cause that, but something pretty awful in my opinion. All right, let's look at the S&P 500 here, since we're a lot of equity traders, and then we'll look at the SPX. This S&P 500 is miraculous. The wedge pattern that is unfolding just so happens to continuously be steeper and steeper and steeper. And rising wedge patterns, again, are notoriously of a much higher probability of breaking to the downside. So I'm still expecting that, positioning myself. But at the near term, we've seen rising wedge patterns grind for such a long period of time before they've actually broken down. For instance, we look at Apple. Apple back here, look at this rising wedge pattern. It just was chopping in this wedge pattern, never breaking down, and then finally it had a big break, bigger break, and then obviously we know what happened. Apple's now back to the highs. So again, rising wedge patterns do have a statistically much higher degree of breaking down. So we just need to be mindful of that in the overall near term. Now, if we look at Apple's chart on the weekly chart, because it's just going in parabolic fashion here, RSI, a little bit more room to run, but definitely getting into this range here where take a look at this divergence that we're putting in, right? From this high pivot going all the way through, you can see that we have a pretty key defined RSI trend line, all right? And which gives us a little bit more potential upside in the near term. Now, the question is, where is this upside going to go for Apple? You know, there's this key trend line, which obviously puts Apple up to 269, which will eventually happen, but I don't think it's going to happen within the next few weeks or few months from my analysis. But if we look at another little trend line, take a look at that one. So in the near term, Apple's obviously at resistance, and I do think that it's likely to pull back. But obviously, if you get through this resistance, then we're into that clear sailing territory, and really there's not too much resistance from here to this 267 area. So we're at a really big inflection point for Apple, in my opinion, and I do think that there's a strong chance it should see a little bit of sell side pressure off of this vicinity. If it's not that trend line, you can use this parallel channel, and you can clearly see that maybe a move to about 230.45 on the Apple weekly chart. So over the next 2 weeks, maybe Apple does want to push a little bit higher. And again, it doesn't mean the market has to go higher. We have seen Apple diverge from the Qs in a big way. Maybe Apple's just playing that catch up that all the semiconductors got, and maybe the market is pricing in some sort of a massive move, maybe an AI play that Apple's doing, maybe something on the horizon that investors obviously are trying to position themselves for. But needless to say, again, Apple is at some intermediate resistance with this trend line here. But if you get through that, then I'm looking for an upside around to 230.72. Let's do the other big boy, Microsoft. All right, Microsoft has just been a monster, closing the session at the all-time highs. I mean, the volume in this region is anemic. I never really like to see these highs being pushed up by light volume. It shows that there's not a lot of selling going on, but there's just a touch of buying that is pushing things up in the near term. Again, Microsoft is staging a potential breakout out of its little rising wedge pattern. So if you see that, this rising wedge pattern is trying to break out to the upside. So it's certainly impressive in the near term for Microsoft. Now, if we look at a little bit of a parallel channel of resistance, we're going to see this one over here, okay? And this one suggests that Microsoft still could push to about 470, 475, so another $15 move, which would roughly be, in the short term, let's just say about a 3.5% move to the upside. So we got to watch that, because there is a chance that Microsoft can and will want to press there. But I mean, there's a limited amount of upside that I do think is left in these equity markets. There's another little channel that goes back even farther, pivot low to pivot low, just kissing those areas, pivot high, and you can see that puts us to about 467. So I would personally watch all of the channels. Obviously watch the near resistance targets, because they are the more likelier ones to play out. Let's just see if there's anything else on Microsoft over the long-term weekly chart. Just like to do these channels just to see how we're trading, and you can see that Microsoft is actually broken out of this channel. So the big question is, we're going to get a pullback eventually. There's no doubt in my mind Microsoft will pull back. The question is, what does the pullback do, and what levels does it hold? So on the weekly time frame, this chart is obviously in a very, very raging strong uptrend bull market. You can't deny that. But the question is, now that we've broken out of this long-term channel that we're chopping in from your COVID low here to your high to your low, now you've sold off a little bit, broken out. I'm looking for a back test of this area, okay? If Microsoft, pushes up a little bit more and then sells off, does it hold the top of this channel? Because if it holds the top of this channel and starts forming a little bit of a base off of that, that gives us a new foundation to actually push even higher in the overall chart. So once we get the pullback in Microsoft, I think the bulls want to maintain this parallel channel. They want to hold the upper boundary range. If you sell off here, if you lose this upper boundary channel and you start breaking this little upsloping trend line, that's a problem. That is a big problem in my opinion. Why? Because it often means you see a retrace of the up move at least back to your first Fibonacci level, if not to your second 382 Fibonacci retrace. So again, the big question is, does Microsoft pull back to this channel, hold this channel, establish a new base, and then push higher? or does it give it up in the near term? But nevertheless, I do think Microsoft is still very, very extended here in the near term, and obviously its valuation is still just one of those names that people are going to buy no matter what, because stocks go up and to the right over the long term. But it's definitely saturated, very, very saturated in my opinion. I certainly think there's a lot better setups overall. All right, let's look at the IWM, so small caps. Let's remove everything. Small caps right now. What's going on with small caps? Small caps at the moment could be setting up a bit of a bearish formation here. We look at this move. So you have this down move, and now you have this little bit of a flag pattern that is potentially unfolding. That to me is a bear flag looking to break lower in the near term. And if we simply just do a measured move here, let me erase that. If we take this little measured move, okay, this trend line pivot high, and let's just copy and paste that, extrapolate it forward, and let's just say this little high pivot that we just made at the top of the flag was our high pivot in this reversal. Take a look at where we could potentially go on the Russell. I have a downside, an initial downside target of about 192.50, and that is probably set to occur within the next couple weeks if this flag breaks. Okay, so watch this flag pattern carefully on the Russell. Keep it very simple. If this flag gets negated, I'll show you how this flag gets negated. Basically, what would negate this flag is the Russell getting a move kind of back over these pivots here. If you want to be aggressive, you use those trend line. If you want to be a conservative, you use that high pivot. So to negate that bear flag, the Russell needs to get it back above this key trend line, in my opinion. As long as you stay inside of this little bit of a wedge pattern, this bearish upsloping wedge, I still see a downside target of 192.80. And then the question is, over the longer term trend, is this a head and shoulders that the IWM small caps is shaping up? Historically, when we go through a process where the yield curve starts to uninvert, that's typically when equities get the sell signal. Now, from my experience, typically quality stocks get sold off last, and shit companies that are hard-strapped businesses with less moats around their business, less, duopolies, monopolies, whatever you want to call it, just businesses that are overly struggling within the small cap space, much more sensitive yields, they get sold off first. So maybe this distribution pattern that we've been seeing in the Russell, I mean, this is a huge consolidation range. Take a look at this range that we've been trading in. I mean, from this breakout here, let's just use this high pivot, the Russell has now been consolidating for 191 days. When you compare that to the S&P's not been consolidating, it's just been rallying in full force. You look at the QQQ, no consolidation, just rallying in full force. So the Russell, to me, is clearly going through a bit of a distribution pattern. A lot of people will say this is accumulation. But in my opinion, when the indices are ripping week after week, day after day to new highs, and the Russell's not really firming up, and you have the Russell actually breaking down on softer yields over the last recent sessions, that's a bit of a red flag in my opinion. And I really don't like small caps and how they're positioning themselves. Again, analysis can change. Obviously, if we get that breakout out of this little downsloping trend line, then we could see a little bit of a continuation move. But the big level on the Russell, okay, if we fulfill this downside target of 192.80-ish, and that's your measured move off of this little bit of a bear flag, if we fulfill that, the problem with fulfilling that downside move is it triggers another pattern. If you break this neckline, then take a look at where the IWM sets up to go. So the IWM could have another 9-10% fall from the neckline, which puts us to about 174.58. Now that's just a quick target. We obviously want to just focus on the pattern that is at hand, and right now what we have at hand is more likely that this bear flag is set to occur. Okay, so I'm waiting and watching this closely because I do think that there's a bit of a bearish formation occurring in the IWM. Let's take a look at regional banks, very sensitive to the Russell as well. Regional banks, as well as the market pushing new highs going lower and lower. Regional banks are also potentially putting in a little bit of a distribution pattern here. I still have a downside target on the regional banks, roughly to hit this trend line. I think whatever comes first, either this trend line, upsloping trend line, or this lower boundary trend line, I think that's going to be the next support zone for the regional bank sector. And if we look at this little parallel channel from the pivot highs here down to your pivot lows, you can see that you'll have a lot of support somewhere around this 44, but this intersection point at 43.50-ish is likely going to be a target that I have in mind, and I think that there's a strong chance we could actually come back down to this 43 area, this 43.50 area on the regional bank. All right, natural gas and then energy. So we'll move along for natural gas, and then we'll look at oil, and we'll look at uranium. So the energy space, natural gas has just been so fascinating. I mean, I've lost on the day trade side, even just trying to scalp this little intraday move. But nevertheless, natural gas is coming up into an area of opportunity, in my opinion. And what's the opportunity? Is anyone wanting to short this? I don't think I want to short it anymore. Our members did pick pretty much the exact high. Never held it the whole way. I wish I did. That would have been a stellar move. I mean, if we look at KOLD, our members entered KOLD at this 34.15 area, and I mean, if I sold basically in the futures market, we could have netted a 63% gain. I only netted over 20%, 21% on our trade, but nevertheless, some members held a little bit more guts than myself. But at this point, natural gas has had a terrific sell, and it's actually looking like a mouth-watering long. Look at this sell-off: 1, 2, 3, 4, 5, 6, 7, 8 consecutive daily candles in a row. So in a span of 8 trading sessions to the low, nat gas has fallen 20%. Our daily RSI still could have a little bit more room to go. 4-hour chart is shaping up for a little bit of a minor positive divergence, so I'm watching that closely. You could get an intraday bounce tomorrow. But nevertheless, this is now back testing this ever so important weekly trend line that I've been waiting for. I've been discussing in all of these videos on nat gas. Watch for this trend line. If this trend line breaks, look out below. But if we hold, then that shapes up for my bull thesis to play. And my thesis is still for an upside target of about $3.50 to $4 by the end of the year. And again, we almost hit it at this high pivot, but my upside target is still between $3.50 to $4 by the end of the year. And I still think we can achieve that if this turns out to be a right shoulder. So I'm looking and actually salivating at potentially starting some swing trade positions tomorrow in the nat gas space. Members, be ready for some alerts. Just be ready for some alerts. And you know the equity stocks I like to play, so definitely keep your eye on this commodity because it's gone through a sheer degree of sell side pressure, and right now, I mean, it doesn't look like it wants to stop. At some point it will, but for the time being, there's just so much selling. And this is the problem with nat gas, guys, is that there's so much leverage in the sector with the triple and the double ETF that everyone plays, and this commodity moves insanely without that leverage. And the leverage is always a scary aspect when trading this commodity because there's so many people that do go full tilt, all in on one side, and then that's when the stock market just somehow senses it and knows. But at this point, I am looking at accumulating a long position in the nat gas front. You can play the likes of UNG, or you can simply play Boyle, or if you're really gutsy and you're looking for that extra leverage, you can short KOLD. So there's a lot of different variations in plays here that we can potentially explore. But nevertheless, I am looking at the long side of natural gas. All right, guys, feel free to put some questions and individual charts as I'm going to wrap up some things here as we go through the rest of the energies, a few other commodities, and some individual stocks. But feel free to put in some chart requests, and I'll try to grab all of those. All right, let's take a quick peek at, since we're still on the energy front, WTI crude. Another day where crude oil is trying to firm up again. Just basically flat in the futures overnight session, but another key weekly breakout candle in crude oil. What does this signify? You know, the crazy thing is that this breakout, if it holds 95, that's my target, $95. So I mean, if crude goes to 95, what the heck do interest rates do? What does the inflation narrative now? Does it shift? Are we now seeing a CPI increase? Because in my opinion, as a consumer who needs gas for my truck, and I hate seeing oil go up. I like it because I'm long oil stocks, but I hate seeing it because I drive a big truck and it takes a lot of gas and it's a pig. So as a consumer, where there's a lot of people in the same position who don't like higher gas prices, and net, it's not only just our gas prices that get affected, it's everything. From a consumer standpoint to services, everything goes up. Oil is just inflationary if it's in an uptrend. It's as simple as that. We don't have to overcomplicate it. Oil moving up over the last 1, 2, 3, 4 weeks will have a higher net impact on the CPI. You can count on that. Now the question is, how much of that impact is the market prepared for it? I don't know right now, but in my opinion, oil breaking out does not bode well for the next 1 to 2 and maybe even 3 CPIs moving forward. So are we going to enter a scenario here where now the Fed is pinned? They can't cut. We've seen the ECB cut, PBOC, BOJ, Bank of Canada. I mean, the Bank of Canada and ECB nailed the exact low in oil on June 4th with the Bank of Canada cut and June 5th with the ECB cut. So here we are in a scenario where commodities are now sniffing out weak central bank policy. And the problem with that is the Fed wants to cut. You can hear it in the tone and rhetoric that Jerome Powell is saying, but now the data that we get over the next 2 to 3 months potentially could put his back against the wall and not allow him to cut. And this is the bigger issue. If the Fed doesn't cut and they have to come out a little bit more aggressive with their rhetoric, that could influence the short end yields. But the problem with the CPI, if the CPI starts to spook investors and come in a little bit higher because inflation's expectations get entrenched, long end yields are going to be the real demon. They're going to be the ones that have to push up. And Powell can influence that. He can, say a few things here and there, but the data is the data. And if that comes out hot and oil continues to push here for that $88, $89, $90, $95 plus, that is going to likely put an upward pressure on interest rates. And the big problem is Powell does want to cut, but I think commodities are going to force his hand to not cut. And then by the Federal Reserve not cutting, that's probably going to spike the Dixie. I still think the Dixie is likely going to press higher. It does look like it's going through a bit of a sell-off and breakdown here in the near term. You'll have some support at this channel, the secondary pivot down here. But I think that if CPI comes in hot, you're going to see a big spike in the Dixie because right now most central banks are cutting and the Federal Reserve isn't. So again, if we see the Fed now having to remain higher for longer and not cutting, then that in theory should strengthen the US dollar much, much greater than all of the other baskets of currency that the DXY is paired to. So again, watching that Federal Reserve decision, watching CPI next week because it's going to be interesting. It's going to be really, really, really interesting to see if inflation starts to uptick. And then let alone, it's not just oil. Again, copper had that explosive move. If we look at copper futures, HG1, this is one of the trades that I've actually been pounding the table on with members. And take a look at that. Another daily high where it's up almost 1% in the futures. I think copper is going back to double top. You heard it here. I think copper is going back to double top, and obviously our members are already positioned on the long side with SCCO, which we've already taken first trim on and profits. We've already taken profits on our call options on FCX. So some nice moves in the copper space. And again, when you have Dr. Copper rallying, so copper is the most used base metal in the world, okay? Let's say copper goes back to the highs. That would be super inflationary. Even if copper went back above, 475, that's super inflationary. Why? Well, let's take a look where we're trading on the long-term basis. Take a look at this. And what's really fascinating is there's actually let me just erase this actually. Let me erase all these drawings. And you can see this is kind of your high pivot range that we really traded in for copper, right? That was your most inflationary range back in 2021, here in 2022, and this was on the back of loose monetary policy. Obviously, our COVID stimulus packages worldwide, etc., tightening cycle. Then obviously has collapsed copper, but now it's starting to work itself back up. So the question is, if copper gets into this super previous high, all-time high pivots, that becomes very inflationary for basically everything, manufacturing, everything, electronics, EV vehicles, everything, computers. There's so much that copper involves, even in housing alone. It's just, it's the base metal of the world. basically our world does not function without copper. And again, copper moving higher is not good for inflation. Oil moving higher is not good for inflation. But if we get back to these high pivots, that's going to be a really, really big problem for the overall copper space. If we look at this little pattern that I'm just observing right now, we can argue that there was an inverse head and shoulders that triggered on copper. And let's just see if we actually fulfilled the upside target. So you can see actually there should be one little more blow off move, and that's kind of what my analysis is pointing to. I actually didn't see this pattern, and this is what's really cool about these live videos is sometimes I just do this. I haven't looked at these charts in a while. We just go through them together one by one, and sometimes I see things that I don't really see, but this was a clear inverse head and shoulders breakout. A nice hard down sloping neckline, a breakout from the neckline should yield us to about 540 on the charts. I mean, geez, to me, that's a problem. It's a big, big problem. All right, let's look at uranium, URA, another energy commodity that's potentially putting in a bit of a weekly reversal candle and now on watch for a breakout. Sorry, I'll just get my tool away. Now on watch for a little bit of an inverse head and shoulders breakout. So this one's on watch for the long side because I still have an upside target of 36.23 for uranium. So here we're running into a scenario where all commodities are trying to put in a reversal. Silver included, gold included. Let's look at that DBC basket. That's another commodity-based basket that's very, very important to pay attention to. Look at that, DBC. DBC is now shaping up for a much, much larger breakout here. And I mean, if we draw this little pattern that's unfolding, and it's not a little pattern, this is a monster pattern in the commodity space, guys. This is a super cycle pattern. If we break in this DBC ETF, I mean, wow. Do you want to be long commodities or what? In my opinion, take a look at that. If we break out of this DBC, guys, take a look at this. Look at this upside. You know, that's about a 13% move, 14% move up to about 26.94 on the DBC ETF. That means that as a collective, you know, we got to see a whole host, a lot more buying pressure in the commodities. If we actually just look at what the DBC ETF is composed of here, and while that loads, we're going to see portfolio. So you can see gasoline, Brent crude, WTI crude, and right here, gold, copper, wheat, soybeans, zinc, aluminum, sugar, corn, natural gas, silver. I mean, we pretty much use everything. I use natural gas. I have silver. I try not to eat corn. It's not as good for you, but it's in everything. Sugar, it's in everything. Aluminum, zinc, soybeans, wheat, copper, gold. I mean, we use all of this. This is basically what the consumer needs on a day-to-day basis, and that's a problem. That's what this ETF is showing us, that all of these aspects of the economy are going to get affected, right? So just keep your eye on all of these plays, you know, from wheat, soybean, zinc, aluminum, sugar, corn, nat gas, silver. And what's really fascinating is this DBC ETF starting to potentially uptick is almost giving us that signal that, you know what, maybe natural gas is going to get a little bit of a bounce here just by the sheer rotation of the DBC ETF. And again, if we look at DBC though, natural gas is very small weighting. It's the second smallest weighting in that ETF, but nevertheless, it is a good sign that DBC is trying to break out, and it could kind of give us this inverse head and shoulders. Notice how natural gas is potentially developing this right shoulder. Well, we look at DBC, right? And DBC has that similar inverse head and shoulders pattern that we just looked at, which is trying to break out. So nat gas is kind of down here at this point, and it's going to need to start to firm up in the near term. All right, so enough about the energy and commodity front. Let's look at some of the movers and shakers like Tesla. Tesla's obviously had a huge move to the upside, breaking out of key resistance without anything stopping it inside. I mean, what a monster move up in Tesla. If we look at this deviation that it's done, you know, so this Bollinger Band, guys, that I have on here is a 2.5 standard deviation move on the daily. Now let's bump that up. Let's take these metrics and let's actually just change it to a 3 standard deviation move. I mean, we're still way outside of that band. I mean, way outside of that daily deviation band. This 3 standard deviation move on the daily chart is epic, is really epic. I mean, the only times that we had this was really on this stage here, and you can see Tesla was just a one-way freight train to the upside, and you can see that it just kept grinding and grinding and grinding along. So potentially we're entering this scenario again, but notice how even during this blow-off move in Tesla never ever broke outside of the 3 standard deviation band. It just held and moved up along it. I mean, we're outside of a 3 standard deviation band. I mean, it's just absolutely crazy. Look at that. We're outside of that band in a big degree. I mean, I don't even think there's really many times Tesla's been outside of a 3 standard deviation band move. You know, there's been a few times here where you had that little peekaboo breakout above, gap up, and then big reversal back in. So I think we're going to go, and we're way more extended than this period. I mean, the RSI of that time was trading at around 63. What are we at right now? The daily 84. I mean, huge move. So all I'm saying here is just be careful if you're long Tesla. I know it's a stock that can have these epic moves, but when you look at it on a technical basis, a 3 standard deviation move is very big. And with the fact that it's trading outside of that band, naturally, I think that price action sellers are going to start to lurk and come in. I would not be chasing the long side, in my opinion, if you haven't caught the trade. I don't think it's a good level to chase. I really do not think it's a good level to chase. I think institutions will just set you up for a nice little gap up and reversal day. So again, if Tesla gaps up tomorrow, probably will see a big reversal day, in my opinion. I mean, a nice 1, 2, 3 bar surge over the 3.5. Let's just see how big of a deviation this truly is. And again, I like to do everything based off of math and statistics. And when we see that type of deviation, let's just go to now a 4 standard deviation. Wow. Tesla is basically at a 4 standard deviation move on the daily chart. That is rare, guys. That is super rare. Quite impressive. Now, obviously, on the weekly chart, it's a little bit different. You're way outside of that deviation band. If we look at even bring that back down to the 2.5 standard deviation that I like to use. And this is the weekly. You can see the weekly time frame not really as overbought as it could be. So, I mean, the deviation band on the weekly chart suggests we could still push up to about 274, but I would be shocked if we don't see at least a 1-week pullback or a multi-day pullback and then a continuation move. This is just an unstable breakout, in my opinion, not one that's going to be sustainable. That robo-taxi hype around August, I think it's the 7th or 8th, it's going to have to deliver in a really big way in order for Tesla to maintain this price action, in my opinion. All right, let's quickly move along to some other assets now that we've gone through some of the movers. And again, NVIDIA. NVIDIA is another one, absolute monster. A little bit of a breakout. Well, it's not a little breakout candle. That's a huge candle. Yesterday, no volume behind it, but a nice 4.57 move to the upside. And this is on the back of Pelosi announcing the fact that she's sold Tesla and accumulated more NVIDIA. So obviously, NVIDIA is now positioned to actually, believe it or not, potentially push for at least a double top or maybe even new highs. I still think NVIDIA is due for a little bit more downside. I still have a downside target of 108, but nevertheless, it is getting a nice little boost here in the near term. We'll just have to see if semiconductors want to hold that capital rotation. At the moment, you can see the weekly RSI is bouncing. As soon as we break this yellow line off of a nice 1-2 weekly standard or weekly negative move, a divergence here, I do think NVIDIA will see a pretty hard degree of selling. But overall, it's shaping up nicely right now. It is triggering a little bit of a breakout on the intraday time frames. This pattern upside does suggest there could be a potential 9.9% move from the neckline, which puts us just right to about 137 on the overall charts. Okay, so we'll keep that up. Mindfulness asking about PHM. Sure. Look at the daily chart. So Pulte Home Group. Yeah, so not a good looking chart. I mean, you're probably going to be stuck here for a few days sideways. I would naturally expect this to hold here and form probably a bear flag or a bear wedge. And then based off of what type of consolidation, if it's a week or 2 weeks, then we can calculate a downside target. But obviously you're hitting some lower boundary support pivot. If we draw a trend line, you're hitting this near-term trend line here. You broke it on day, now you've recaptured it, so it's a short-term positive sign. I am seeing, though, this can be defined as a potential M top. So you can see the M pattern here. So M tops are naturally bearish. They do host and often yield quite a bit of downside. So how to play this pattern now, guys? And thanks for putting this on watch. And this is obviously could also be indicating interest rates are set to rise. Why do home stocks and builders come under pressure if interest rates are set to make a little bit of a move higher? You even look at ITB. ITB also having a massive breakdown, head and shoulders on clear watch here. But PHM, take a look at this. So if this M top plays out, we have a downside move, so which is your highest pivot? That's your highest pivot. So we have a potential downward move from the neckline all the way to about 94, 95 bucks. So I'd mark that level in your chart, 94, 95 bucks, right down there. Now the question is, what type of pattern do we form here? Does it turn into a bear flag? Do we retest this? It's not a short yet. It has confirmed the breakdown, but we need it. I think that you're going to get a couple days of chop. I would love to short this stock if it retested the neckline. That's where I would look for an entry. However, if we don't test the neckline and we just get, a nice little few days of bearish consolidation, forming a bear flag, then we can look for a short setup on the way down. Now, if for some reason you get back above this red bar breakdown here, so this red bar, and if you want to even be a little bit more conservative and use this high volume wick candle around that 111.61, if PHM were to get back above on a daily close above this 111.61 or this neckline, then you look for longs. Okay, right now it is favoring a little bit more lower price in the near term. And again, let's just look at the overall chart setup here, just to see if there's any longer term trend lines that confluence with that area. So whenever we get a downside target off of a pattern, we want to start looking, okay, is there any other trend lines? Is there fib levels? Is there moving averages? Is there anything that we can use to say, you know what, price could confluence there? And take a look at that trend line. Pivot low to pivot low, right into that area. Call it mid-August. We have a confluence. So that's going to be interesting to watch. Very interesting. And if we look at that ITB obviously running to the downside, but again, a little oversold in the near term, probably is going to try to stage a bit of a bounce here, coming into a double bottom on the RSI too, with a lower low in price. So that's a positive divergence for ITB. Okay, so ITB's probably, and home builders are probably going to try to stage up and bounce here. It's not a guarantee. There still could be another little leg lower to about this 95, but watch this parallel channel on ITB. And let's just see if this ITB has a fib level that we can use. Yeah, so you're piercing that 382 already. That's a problem. So you could even want to flush to this 50%, so 93.78, 93.78. But the overall trajectory, even though you're oversold, I do think that you could still likely fall a little bit more. I do think you will fall a little bit more. All right, let's quickly move along. And XLRE, yeah, so you're in the real estate there. XLRE. What's interesting is this chart setup is actually looking a little bit more bullish than some of the individual home stocks. So let's just go through this. Just give me a second with this. I just want to map it out on my bigger time frames as well. I'm just pulling it up on my other charts here. Just bear with me. E. So XLRE is tricky. This is a tricky one. There's a lot of momentum building here. Let's just erase everything and start fresh. There's a lot of momentum building here, guys. What I'm seeing on my weekly time frame and actually my daily time frame, I have my other chart here that I'm pulling up. You have on the daily and the weekly time frame all of your moving averages coiling. And they're coiling in about $1 range. So it's a tight formation that's building right now. Whichever way this breaks out is going to be a big mover. Now, there's a couple bullish setups that we need to be mindful of. So one being, okay, there's your left shoulder. There's your defined head pivot. There's your potential right shoulder. Where would your neckline be? Well, your neckline would have to be from this high pivot to here. So you can see that it hasn't broken out yet. But you've been rejected off it once, twice, maybe potentially going up there for a third time. Now, if we draw in another little resistance trend line, you can see that you are coming up into this key area right now as we speak. And the question is are we going to get bust through this area? If we do, then we're probably going to try to make a move for this 43, 42.89 area. But again, I'm just skeptical of real estate, XLRE, especially with those home builder charts not looking too good. But nevertheless, I mean, we just got to trade the pattern in front of us. I think the easiest and most simple thing to watch is the wedge pattern, okay? For all traders, investors out there, watch this wedge. We are approaching the apex, so that's what I mean by this pattern is coiling and building momentum. Watch this apex. As we approach the apex, which way is it going to break? Buy longs if it breaks to the upside, short it if it breaks to the downside. That's as simple as I can give you. But right now, it hasn't given us that definitive move. But the way I see inflation moving up in the near term, with oil, copper, uranium, gold, silver, DBC, wheat, sugar, pretty much everything that we use as consumers, I would naturally expect lower price in real estate, especially since this is greatly affected by interest rates. And then another thing, I mean, we just go through the basic analysis of TA, right? So here's your high, lower high, lower high, lower high, lower high, lower high, and potentially another lower high. So the trend to me is down. It's clear. There's lower highs, lower highs, lower highs. I mean, we're granted we've made a low, higher low, potential higher low. We have not made any higher highs in this trend. So until we do so, you just have to lean a little bit skeptical of this pattern because it has not proven itself just quite yet. Let's look at this retrace zone. We keep getting rejected off this 382. So take a look at this 382 area. Keep that on watch, as well as keep this little inverse head and shoulders neckline on watch. And you can clearly see how both this inverse head and shoulders breakout neckline and that 382 fib that's kept you in check once, twice, confluences right at the same spot. Kind of freaky, eh? Very freaky. All right, feel free to put any other charts in the chat, guys. I'll be happy to try to take a peek at them. I'm just scrolling through some messages here and some alerts, trying to see if there's anything else I need to bring you up to speed. Let's just scroll through some of the data that we get next week. I want to discuss some of the emerging market stocks because I do think that there's an opportunity potentially in China and some of the emerging market plays. So first things first, tomorrow morning we do have the average hourly earnings for the month-over-month data for June. So the market can take that as inflationary or disinflationary depending on what the number is. Then you have non-farm payrolls at 8:30. Consensus is 194,000. The previous reading came in way higher. It came in at 272,000. So non-farm payrolls measures the change in the number of people employed during the previous month, including a couple industries like farming. And it's basically an indicator of job creation. So expect that reading to influence yields in the dollar at 8:30. Unemployment rate is also out tomorrow. So here we're running into a scenario where we have so much employment data coming out tomorrow that we're going to get some volatility, some natural volatility. So the unemployment rate, the forecast is, consensus is to remain at 4%. Last time the forecast was 3.9 and we came in at 4%. So it was a surprise spike into that new psychological number. We've been trading in the threes for years now. It's been depressed since we started spending and doing that whole bazooka of stimulus. The last time we were in the 4% range was January 7th of 2022. So actually, sorry, February 4th of 2022. So it's been almost over a couple of years now, over 24 months since we've actually seen a 4 handle on the unemployment rate. And the question is, are we going to see more? I do think that we could potentially run into this issue here. And this is a bit of a macro talk now, just discussing the employment rate. But the problem with the employment rate, if it starts to spike here, we could be obviously seeing some deterioration. This would be the worst case scenario for the Fed and obviously the economy. If we see the unemployment rate start to press higher, but we don't see commodities like oil, commodities like nat gas, gold, silver, uranium, copper, all the big inflation ones, if those assets don't see weakness and start showing more disinflationary pressures, what if we run into a scenario where CPI starts spiking up a little bit, but the labor market starts to deteriorate? Has many market participants thought about that? What if we run into a scenario where, okay, the bond market wants to cut rates because the labor market's deteriorating, but the bond market can't cut rates because inflation isn't deteriorating as fast? And that's where I think we're going to run into a bit of a problem. And that's where I think the risk in the stock market lies, is if we run into that scenario where, okay, we're now seeing deterioration in the labor market and we're not seeing deterioration in CPI. A lot of people are still saying we're in a disinflationary trend, which we are, no doubt. We're well off of the highs, but I think that this last few percentage points, to get to that 2% target that the Fed has, is going to be really sticky. In my opinion, I just don't see it happening without some sort of a drastic shock to the system, economic decline. You also get the private non-farm payrolls tomorrow. You get some manufacturing payrolls tomorrow. You get the Canadian unemployment rate. Let's see what else we get. Fed monetary policy report, yada. Lagarde is speaking, some ECB data. So I'm just scrolling through, and then on the following, let's see, July 8th. Sorry, just bear with me here. Yeah, so tomorrow is jam-packed for data. And then next week, obviously we head into that inflationary print with the CPI expecting to be released. Let me just find out which day the CPI is. I think it's the Wednesday. It usually is the Wednesday. Maybe it's the Thursday this week. Atlanta Fed GDP on the Thursday. Okay. Interesting. Very interesting. Yeah, so CPI is next Thursday, July 11th. So we have one more trading week. This week kind of gives us a sense of where the labor market is running. And let me be clear, these next 2 weeks, it could be a very big make or break for the market. If we see a strong labor market, the market wants a Goldilocks. It doesn't want the labor market to be too strong because then yields have to spike. It doesn't want the labor market doesn't want it to be too weak because then the yields have to fall. And then as that begs the question, are we running into a recession? Or do our investors need to pile back into bonds? Our equities are at risk of being sold off. There's a lot of moving parts to it. So they're looking for a Goldilocks number, but I think that eventually the thesis of running into a scenario where we have the labor market breaking down as well as inflation remaining much stickier than market participants are expecting, I think that's going to be the catch-22 that influences the market. And we're seeing some glimpses of that yield curve starting to uninvert. And what do I mean by that? Well, we look at that US 10Y minus your US 2Y. So this is going to give us that yield curve spread where we take the 2 and we're minusing, and you can see that on Friday the long end of the curve did take a little bit of a breather, but it's now still forming this large bull flag pattern, cup and handle on the weekly chart. And if this breaks out, this is telling us that the inversion of the yield curve is coming to an end. And again, anyone that knows in my analysis what it means, there's only been a few times in history where the yield curve has been inverted, and believe it or not, this is the longest that the yield curve has ever been inverted. You look at it down here, 2006, 2007, late 2007, 2008, it starts to uninvert. You look at this period here back in the dot-coms, 2000s, starts to uninvert, early 2000, late 2000, early 2001. Same thing over here, the 80s, late 80s, 89. Then we head into the 90s, it starts to uninvert. And again, typically things don't bode well for the stock market when it starts to uninvert. If we just throw up a simple SPX comparison, let's go new price scale. Look at what happened during this inversion. When we start to uninvert, equities got a big sell-off in the S&P. Same thing here. When we start to uninvert, markets got a big sell side program. So the question is, once we start to uninvert, are we going to sell off like we did on this time, and this time over here? Is the success rate of the yield curve inversion going to be broken, or is it going to rhyme again? You know, they say history doesn't repeat, but it often rhymes. Let's see. Let's see if this is going to rhyme just like the last 3 previous inversions that we got, which resulted in some pretty catastrophic declines in equity prices. All right, other than that, I think I am going to wrap up the video here. Let me just see if there's anything else I want to finally touch base on. Again, we can look at some China stocks really quickly. Alibaba. Obviously, Alibaba has been one on a fundamental side that just keeps getting decimated, price after price, but it's at an area of interest now, beginning the fact that it's actually broken out here. Can see this huge breakout in Alibaba. It's now been digested, and it's showing some signs of life here off of a nice high volume breakout. So I think this one can be bought now on the long side. I was actually looking for a back test to this falling wedge pattern. There might be a scenario if the dollar presses here in the near term off of a short-term spike in rates that we could see China equities dump a little bit lower, but I was looking for a back test to this falling wedge pattern. But needless to say, it does look like Alibaba's trying to actually break out here and firm up. There's a couple key little trend lines I'm watching as well, and this was the big level connecting this trend line low from your 2022 low to your pivot low to your pivot low. I was looking for a back test. Sorry, my chart just went all over the place. I was looking for a back test into this vicinity, $70 test area. So we'll see if we get that back test, but for the time being, Alibaba is starting to shape up, and there is a near term. Look at this little falling wedge pattern, guys. This is a bullish falling wedge pattern that has now broken out. So again, nice little technical breakout on Alibaba. It does suggest that there should be some more upside in this name. Nevertheless, hopefully this analysis helped. Hopefully everyone has learned something in this video, this live stream. Obviously we don't get to do this much, but given today was a bit of a break from the stock market and trading equities, we wanted to get a nice little stream going. So I just want to say thank you all for tuning in. And again, I've totally forgot to update the quality, the bitrate on this video. So I was streaming at half the quality and speed. Apologies about that. Usually someone does remind me. But nevertheless, thank you all for tuning in. Hopefully everyone has helped. And hopefully we're ready to make some money in the stock market next tomorrow. So it's going to be an interesting day. Again, areas of opportunity that I see: crypto, natural gas, copper, and we'll just see how the market wants to open tomorrow. On that note, take care, everybody, and we will see you on the charts. Any final questions, feel free to put them in. I'll give you about a minute, and then I will look to end things. Let me just scroll through while anyone potentially has some final thoughts and questions. I will scroll through the list here just to see what's happening. 10-year yield gapping up here. Here you have yields gapping up slightly a little bit. Canadian yield is still pushing firmly. Nat gas again down slightly. Futures are kind of mixed, still strong. Russell, S&P green, NASDAQ weak. Nikkei strong. Let me just see if there's any other interesting stocks I want to touch base on here. Again, you did see some nice capital rotation on Friday, or sorry, on Wednesday into some of these names, China names. A lot of the China names saw some volatility. Again, if we look at some of the sectors, that were a little bit weaker. So your sectors that saw weakness: healthcare, real estate, staples, financials, regional banks, retail. Strength, obviously XLK, XLY on the back of Tesla, Amazon. And energy, materials, and communications were firm. On that note, thank you all for tuning in, and we'll see you on the charts tomorrow.